Hello friends, I hope you and your family are safe and well. Let us discuss the IFRS today. It is our second lecture. We will discuss in the beginning. It is our subject name is International Financial Reporting Standards, IFRS. Now friends, when once IFRS are the global accounting standards used by more than 125 countries in the world. It is used by more than 125 countries in the world. And how it is effective and what will be the other standards that we are going to learn. So friends, here whenever we will talk about the international financial reporting standards, so more than 125 countries use the IFRS. The International Accounting Standard Board, a private sector body and they develop and approves the IFRS. Now, which body developed the IFRS? International Accounting Standard Board. The, Now it is replaced with the International Accounting Standard Committee in 2001. Before 2000, IASB was there. After 2000, IASC is there. Now friends, these two bodies involved for issue IFRS. So International Accounting Standard Committee issue International Accounting Standards from 1973 to 2000. 1973 to 2000, IASC, they have a right to prepare accounting standard. That time, name of the accounting standard was International Accounting Standard. Then since then, IASB has replaced some international accounting standard with new IFRS. Now IAS, then they'll replace new IFRS, and some IAS they adopted, some IFRS newly proposed on the topic for which there was no previous IAS. It means IAS was the old accounting standards and it is replaced with IFRS. Nowadays, in International Financial Reporting Standard is a new accounting standard accepted by more than 150 countries, not including India. India has not accepted. Why not accept, that also we will discuss. But this whole world accepted the IFRS through the committee. Both the committee, which committee? International Accounting Standard Committee and International Accounting Standard Board have issued interpretation of the standards, and IFRS are principle based, drafted liquidly and easy to understand and apply. Now we will think about the framework of the financial statements. Now framework of the financial statement, the framework for the preparation and presentation of the financial statement, which is issued by International Accounting Standard Board and which is basis for framework issued by the ICAI. ICAI, Institute of Chartered Accountant of India, this particular organization, we have prepared our own accounting standards, and International Accounting Standard Board, and they have a right to preparation and presentation of the financial statements. It is set out the concepts that underline the preparation and presentation of the financial statement for external users. Whenever we will talk about the external users may be shareholders, bankers, investors, creditors, suppliers, government, income tax authority. These are the examples of the external users, even the competitors also. Now, whenever we will talk about the purpose and objectives of the financial statement, what are the purpose or what are the objectives of the financial statement? At that time, we have to think about the 2 points, that is a positioning, performance, flow, and stewardship. Now, positioning, performance of the flow, that we will discuss. In that, we have a balance sheet, profit and loss statement, cash flow statement, make up the financial statement of the entity. The objective of the financial statement of the business entity is to provide information about the financial positions, performance, and cash flow of the entity that is useful for economic decision making by a broad range of the users who are not in the position to demand the reports tailored to meet their particular needs. General purpose of the financial statement provide information to help the users to estimate the equity values of the reporting entity and to assess an entity prospects for the futures, net cash flow, existing and potential investors, lenders, and other creditors need information about the resources of the entity, claim against the entity, and how efficiently the uh, effectively the entity management has discharged its responsibility to the use the entity's resources, and the financial information about the reporting entity is useful in deci- deciding whether to buy, sell, or hold the equity and debt instruments, and whether to provide required settlement of the loans and other form of credits. Users of the financial statement also need to how know short-term cash flow, liquidity, and strength of the financial position, and the interest coverage and historical trend of the profits and loss and interest coverage. These are basic things are there. We will prepare financial statement. Now, stewardship means financial information also show the steward result of the management, the accountability of the management for the resources entrusted to it, shareholders who vote on whether to retain the director or replace them, and how member of the management should be remunerated to for their services, need information on which how to base their decisions. Shareholders decisions making process may include in evaluating the how management of the entity perform against the management in competing the entities in a similar circumstances. The friends, the purpose and objective of the financial statement is main purpose providing information regarding our performance performance of the financial statement. It includes the balance sheet, profit and loss statement, and cash flow. So I hope you understood the purpose and objectives of the financial statements. Now, whenever we will talk about the characteristics, whenever we will talk about the characteristics of the financial statement, the first characteristics is qualitative. Why qualitative? The qualitative characteristics of the useful financial information are the characteristics of the financial statements. which are most useful of the existing and potential investors, lenders, and other graders for making the decisions about the reporting entity on the basis of its financial reports. So understandability, reliability, relevance, comparability are the main qualitative characteristics of the financial statements. One, let us discuss understandability. Understandability means what? The information provided in the financial statement should be presented in that way that make it understandable by user. User should have reasonable knowledge of the business and economic activities and accounting, and a willingness to study the information with the reasonable diligence. Relevant information should not be omitted on the ground that may be too difficult for some users to understand. We have to classify presenting the information clearly and concisely makes it understandable. Then next characteristic is relevance. The information provided in the financial statement must be relevant to the decisions of users. Information has the quality of the relevance when it helps users to evaluate the past, present, and future event, or confirm and correcting their past evaluation. Then materiality provides a cut-off point of the relevance. Information is a material if it is omitted or misstatement could influence the decisions of the user. Now friends, next characteristic of the financial statement is reliability. The information is reliable when it is free from material error and bias and represent the faithfully that which it either purpose to represent and could reasonable to expected to represent information. Then we will talk comparability. This is one of the important quality characteristics of the financial statement. The user must able to compare the financial statement of the entity through time to identify the trends in its financial position of the performance. Then after that, time timeliness. Timeliness means to relevant financial statement must be able to influence the economic decisions of the users. Timeliness involves provide information within the decision time frame. If there is a undue delay in the reporting of the information, it may be lose its relevance. Then balance between the benefit and cost. It is very important characteristics. Information should be more than the cost of the providing it. The evaluating the benefits and the cost is a sustainably judgment process. Therefore, we can say that the benefit may be also include better management decisions because financial information used internally is often based on the list uh, partly information prepared for the purpose of the financial reporting purpose. So these are the all characteristics of the financial statements. So I hope you understood. Now one thing you have to keep in mind, whatever we I discuss, whatever I inform, or whatever I explain, that you should write in your notebook. What happened? University has decided to conduct this your exam in a multiple choice mode. Whatever I discuss, it may be reflect in your exam by way of objective questions. So you should understand first this particular concept, and whatever I provided notes that you should study properly, write the notes in the notebook, then you can understand understand the concept, you can easily understand that particular information and this particular subject knowledge. These particular books are not available in our market also, and therefore whatever I provided, it reflects in your exam. So whatever lectures I will be conduct in this particular period, that you have to attain, and you have to write the notes in a regular manner, you will score good marks. I hope you will score good marks. Okay, bye, thank you.